Gold just hit an all-time high, and it's still at the peak it hit last year. It looks like the Federal Reserve's interest rates and real yields are influencing gold prices once again. Experts are predicting that gold prices will continue to go up in 2024 and 2025. Here's why. First off, gold and the US dollar have an inverse relationship. A long time ago, if an ounce of gold was $1,000, then $1 was like a small piece of that gold. Now, most countries use something called fiat currency. It means their money's value depends on things like how much money they make and how much people trust their government. It's a bit riskier, but they have more control. When people don't trust their government or their money loses value, they often turn to gold. In the last 5 years, gold and the US dollar both went up together. Experts say it's because of things like world debt and a trade war between China and the US. When the US dollar is strong, gold keeps its price in check. But when the US dollar weakens, gold gets more valuable because you can buy more with it. Thanks to inflation, commodities like gold and silver are popular once again. Why? Well, economic and geopolitical uncertainty make gold and silver the best of safe assets. That's not all either. Everyone's expecting the Fed to cut rates sooner than expected. So, if there's a little dip in the coming months, it could be the perfect time for investors to jump in. There's also been a global shift away from the US dollar. Now, don't expect the world to ditch it overnight. But there's a buzz as countries look to dodge potential US sanctions and that hefty US debt. ASEAN and BRIC Plus nations are taking a stand. They've pledged to use local currencies more. And India made a bold move in August 2023, buying oil in rupees from the Abu Dhabi National Oil Company for the first time. It might seem subtle, but experts think it's enough to keep gold above the 2,000 mark. It's not just inflation that drives the price of gold upwards, though. So does demand. Global central banks are going all in on gold. Central banks, led by the powerhouse China, went on a shopping spree, securing over 800 tons of gold in the first 3 quarters of 2023. This beats the gold-grabbing spree we saw in 2022, which already set a record for demand. According to Shearer, the head of base and precious metal strategy at JP Morgan, there's still room for more gold to make its way into central bank reserves. Why? Because these institutions are all about diversifying their assets. According to JP Morgan research, we might witness gold reaching new heights with a peak at $2,300 per ounce in 2025. How? Well, they're banking on the Federal Reserve making a cutting cycle move, offering up 125 basis points of cuts over the latter part of 2024. The prediction here is the Fed's official outlook, foreseeing core inflation easing to 2.4% in 2024 and 2.2% in 2025, before settling back to the 2% target in 2026. Looking ahead, economists predict a slowdown in U.S. growth to 0.5% quarter-on-quarter by the second quarter of 2024. The plan? The Fed might kick off rate cuts in June, aiming for a total of 125 basis points by the end of the year to steer clear of a recession. Will gold hit that all-time high? Time will tell. Another thing driving demand for gold is wealth protection. Gold is also like a financial safety net when things get uncertain. People turn to gold when the economy isn't doing well because it's seen as a stable and reliable asset. When other investments like stocks and real estate aren't performing well, gold often becomes more popular. Why? Because gold acts as a shield, protecting your money from things like currency losing value or prices going up, inflation. It's like a security blanket, especially when politics get a bit crazy. So, in simple terms, gold is a go-to for many when they want to keep their wealth safe during unpredictable times. In a survey, central banks said they love having gold because it performs really well when there's a crisis. And get this, 1 in 5 of them plans to get even more gold in the next year. When the COVID-19 pandemic messed with the economy, the price of gold went up. Investors loved it because it's like a shield for their money. especially when things like stocks or bonds are acting up. In 2020, when everyone was worried about the pandemic, gold prices went crazy high. It even hit a record in August, going above $2,000 for the first time ever. But when good news about a vaccine came out, gold prices dropped a bit, although they still stayed strong at under $1,900 per ounce. Another reason why the price of this precious metal goes up is the difficulty involved in mining for gold. Gold mining is like a global treasure hunt led by countries like China, South Africa, the United States, Australia, Russia, and Peru. Their success in finding gold affects its price, just like when a resource becomes scarce. In 2020 and 2021, we dug up about 3,000 metric tons of gold each year, a bit less than the gold bonanza of 2018 and 2019. But here's the thing. Finding gold is not as easy as it used to be. The simple pickings are gone, and miners have to dig deeper, facing more dangers and causing a bigger mess for nature. It's like a challenging game where the costs keep going up and we get less gold in return. So when you hear about gold prices going up, it's because finding gold has become a tougher and pricier activity. There's also a greater demand for gold by investors, not just central banks. There's still a ton of room for investors to jump on the gold train, either by grabbing gold on an exchange or through an exchange-traded fund, ETF. Keep this in mind, ETF holdings in gold have been on a bit of a diet since mid-2022. But guess what? If investors start making longer-term bets on both exchanges and ETFs, thanks to a cutting cycle, it could be a golden ticket for a rally in the second half of 2024. As interest rates become more relaxed, recent ETF outflows might do a U-turn. Yep, you heard it right. Expect a comeback with retail-led ETF inflows boosting gold's popularity and sending prices on a joyride. And the grand finale? A combo of solid central bank purchases and a surge in physical demand when prices dip will be the dynamic duo supporting gold prices throughout the twists and turns of the Fed cycle's grand finale. Keep in mind that gold prices are dependent on the market. Gold can be a go-to player when things get shaky in the economy. But here's the deal, gold is a commodity, and its value is like a popularity vote. It's worth what everyone agrees on. Now, the tricky part. When there's a full-blown market panic, gold might not be worth it. It can tag along with other commodities and take a dip as investors ditch the risky stuff for safer bets like US Treasuries. Ever heard of the golden dilemma? It means gold's price is like a concert ticket. More people buying means higher demand and a price hike. Forget complicated economic theories. It's all about popularity. If people start rushing to gold, the price shoots up, no matter what's happening with the economy or government money moves. And that's exactly why gold prices will continue to go up in 2024. From the dance between gold and the US dollar to the global shift away from traditional currencies, the stage is set for an exciting gold rush. As central banks load up and investors hop on the gold train, it's clear that this precious metal is more than just a shiny accessory. It's a strategic move for wealth protection. Any questions? Drop them in the comments. If this resonates with you, show some love with a like and hit that subscribe button for more gold and silver wisdom. Thanks a bunch for tuning in, and catch you in the next video.